Hello and welcome. You're watching The Money Show, your one-stop destination for your personal finance queries. I'm Kavita Thapliyal, and today, once again, we have a power-packed show for you today where we'll be talking about your financial goals and helping you understand how to strategize each and every financial goal, whether it's your kids' education, it's your retirement planning, or you want to buy your first house. Financial planning and having the right kind of financial portfolio for all your financial goals is the first step towards financial independence, and we have you sorted over there because all you have to do is just send across your questions. If in case you want us to help you with your financial portfolio, send across your queries on our WhatsApp number, which is 865-797-4571, and the email ID is themoneyshow@etnow.tv. All right, so let's begin. And today the focus is on our viewer queries. And for that, I have with me Nisreen Mamaji, CFP, MoneyWorks Financial Services. Nisreen, hi, good evening, and welcome to the show. Nisreen, let's begin with Santosh's question, and a very interesting question. I think through Santosh we can address a lot of other viewers who have a similar kind of query. So he wants to know: are index funds better to invest? And if yes, why we should invest in an index fund, and what are the best index funds to invest right now? How long should one invest in index funds? So a passive and active investment strategies is often discussed, and it's a trend in the West where passives are preferred more, but then in India we always talk about fund managers having the ability to give us the alpha and help our portfolio boost returns out there. But having said that, index fund or passive strategies are also catching up. Now, if I just want to focus on the passive strategies, within that also whether index is the right option for you or to go towards an ETF is the right option for you is often debated and discussed. Talking about just focusing on a passive strategy, what will be your take? An index fund or an ETF, and why?
Sure. So it's a very interesting question,
Right.
definitely. What I would like to draw Santosh's attention to is that index fund is an excellent investment option, especially for the long term, because, as a passive investment style. However, whether, it also depends on your risk tolerance, on your own financial goals, and, your investment style. So compared to actively managed funds, mutual funds, index funds have lower costs. They have broader diversification, and they'll have consistent performance with the markets because they are the markets. That is the benchmark. Now, when should you actually consider investing in index funds? So they have low expense ratios. The pros are that they have low expense ratios. So index funds typically replicate the index, like the Nifty 50 or the Sensex. So there will be no higher fund management fee. They are market linked returns because over long periods, the broad indices like the Nifty 50 or the Nifty Next 50 have outperformed some of the actively managed funds for sure. You'll have diversification across different sectors and companies, and you won't have a fund manager risk because there is no active fund management style. This is just replicating the benchmark or an index, so there will be not much of the fund manager risk. And it's ideal for a long term wealth creation, say about 10 plus years goals. So what I could recommend to you is, say, the Nifty 50 and the Nifty 50 index, the ICICI Pru, the Nifty 50 index fund, or the NUTI Nifty 50 index fund. And in the next 50, I could recommend to you the DSP Nifty Next 50 fund. Also, we have, equal weighted funds. So HDFC Nifty 100 equal weight fund. That's also another recommendable one, which doesn't replicate the index completely, but each of the stocks in the index will have equal weightage. Okay, so they will each have, say, about 2.5% weightage in the Nifty 50. In the Nifty 150 index in the mid cap space, you can go for the Motilal Oswal Nifty Mid Cap 150. And if you're looking at an international index fund, you can look at Motilal Oswal Nasdaq 100 Fund of Funds for global investors. Now, the final thought, is basically for a large cap exposure, index funds are generally a better choice due to lower costs and difficulty in beating the benchmarks. But for a mid or a small category, a very carefully selected active fund can still outperform. So you can get, better alpha in inefficient markets, in the small cap space and in the emerging market space. You'll also have to take a little risk, for a higher return. And so to specific strategies or, themes like ESG, pharma, mid cap, in those spaces also an actively management fund will be much better. So you can look at HDFC mid cap opportunities. You can look at an SBI small cap fund. You can look at ICICI Pharma Healthcare Diagnostic Fund. So these are the places and these are the funds where the active management style will give you a
Right.
better return.
Right.
But otherwise, if you're a disciplined investor, then an index fund or an ETF, both are good options for you.
So I just want to know in terms of cost of investing in an index fund, an ETF fund, as compared to an active. What is the difference? Because this is a very huge factor for a lot of investors.
So obviously an ETF will have a very low cost because it's an exchange traded fund. So they won't have any of the fund cost also. So if you're looking in, in costing, the cheapest no frill product will be an exchange traded fund. If you go for a mutual fund, passive kind of investing, then you'll be paying a little more. And if you go for, an active management fund, you'll be paying a little more. So the whole idea is if you are paying that little more, then is it justified or not? So as I mentioned, the active management styles can be followed in the certain areas or sectors that I mentioned above. But if you're going for a no frill and you're only very, very cost conscious, say in a large cap category, then you can be going very easily in an ETF fund.
When you say some charges, what is that bracket of charges that we are talking about, and how much would that reflect in the NAV and your returns also?
So basically, in an active management style, you could be paying anything in a direct fund. You could be paying anything between 1.2 to 1.5%. If you're going for a regular option, you could be paying say 1.5 to 1.6. In an ETF, it could be as low as 0.02 or 0.5. And in a fund, in a passive fund, you could be paying 20 bips to 50 bips. So that would be the range of the costs involved. Now, obviously, if the cost is lower, then your NAV is going to be higher at any point of time. So when you redeem, for example, all these inbuilt, costs will be reflected. So therefore, your returns will be that much higher. So what you are essentially doing in an active management style is you're paying for that, fund management. So there you will be paying, say, at least, 1% or 1.2% higher than an ETF or a passive fund. So bear in mind that that cost will be justified when you are actually doing the fund managers actually able to do some stock picking for you, and therefore the returns are higher. So this is the range in a passive fund, in an index fund, and in an active fund.
All right. Nisri, let's take Rahul's question. And again, a very interesting question. He wants to invest 6 lakhs as lump sum. And investment period is almost 12 years. And portfolio worth currently is 2,44,000. Okay, so I'm assuming that he already is investing in mutual funds. If that is what he's talking about, then we do not have the details, I guess, with me. Or do we have the details? If we have, I think we'll be flashing it on the screen, but I don't think so. He's given us any portfolio details. Okay, so no portfolio details. So then just look at it as a fresh question, and if there's any repetition or overlapping, then maybe Rahul will have to come back to us again. So, okay, so in lump sum investment, what really matters is the timing. That's the thought. Is it right?
Sure. So he wants to invest for about 12 years.
Yeah.
The recommendations are about 7,000 rupees in Parak Parik Flexi Cap Fund, Kotak Emerging Equity Fund 4,000, iPro Blue Chip 4,000, Quant Small Cap 3,000 rupees, HDFC Small Cap 2,000 rupees. So the total SIP is 20,000 rupees, and his current portfolio is valued at 244. So keeping in mind that he will continue with his SIPs for the next 12 years, and he might be getting a compounded annualized growth rate of about, say, 12%. After 12 years, his portfolio will be worth about 74 lakhs. Okay, and these funds are pretty much balanced. It's a complete and holistic portfolio because various categories are already there. He's got flexi cap, blue chip, small cap, quant and HDFC, and the emerging blue chip of emerging equity of Kotak, which is a large and mid fund. So overall, he can continue these 4 funds. In terms of the recommendation for 6 lakh rupees lump sum, we would recommend to him Flexi Cap, Parak Parik Flexi Cap, 3 lakh rupees.
Nisreen, can you please repeat the name of the funds? I'll just note it down. It's Parak Parik Flexi Cap, Kotak Emerging Equity, you said?
Kotak Emerging Equity.
Okay.
ICICI Pru Blue Chip,
Okay.
1,000 rupees. Quant Small Cap 3,000 and HDFC Small Cap 2,000.
Okay. So no specific coverage. Okay, so I mean it's very well diversified. And what should be the ratio? Because it's 6 lakhs, right?
So in the 6 lakhs, the allocation is 50% towards Parag Parikh Flexi Cap to 3 lakh rupees.
And there.
Motilal Oswal Mid Cap Fund 2 lakh
So any
rupees.
specific reason behind parking 50% to Parag Parikh Flexi Cap, because it has a larger scope of
Right.
large caps in it?
Large cap, also mid cap, and also some international exposure.
Yeah.
So just to go at this
But will
point,
that money go for him now, international exposure, because that is capped?
in the Parag Parikh Flexi, yes, you can continue to invest in that fund. So you can go for 3 lakh rupees there.
Yeah, but then
Moti-
is the fund investing in international market now? Because we have not seen any redemption and they opening it for international investments again. That has been no update on that. Is it true?
So, yeah, absolutely, that is true. But then, depending on when the RBI opens the purchasing for international funds, Parag Parikh has the mandate to invest in an international fund, so it will do it as and when the ability is there. So that
When will
option
that
is still
happen?
open.
It's been what, more than what, 2.5 years, 3 years that we are looking at the time frame. Whenever RBI opens and whenever the cap is lifted, the fund house can again invest in the international market. We were just waiting for that. But then, yeah, having said that, Parag Parikh Flexi Cap is one of our experts' favorite funds. So you're saying 50% over there, and apart from that, how much to divide in what then?
2 lakh rupees, and ICICI Prudential Manufacturing Fund 1 lakh rupees, which could give a thematic kind of an exposure to the
Why manufacturing? Any specific reason?
As you've noticed in the last few budgets also, we are, giving a lot of emphasis on manufacturing, on infrastructure. Even this year's budget is definitely focusing on some of these, areas. So we do expect that manufacturing as a theme will play out. Currently, I mean, it hasn't yet played out. So this is a good opportunity for you to invest for the next few years and see some, growth in the manufacturing sectors and the manufacturing theme as
Consider a
far as the
BFSI. Why not consider a BFSI? Don't you think that will do well as compared to a manufacturing theme?
So BFSI is already there, part of the FlexiCap fund of Parag Parikh and in Motilal Oswal as well.
Okay.
More or less, at least one third of each of the portfolios will already be BFSI. So you don't have to take a separate scheme, in your investment. But if you want to get a well-rounded portfolio, the few themes that, cap category would cover diversified various sectors and various stocks. The mid cap would give you a little emphasis on mid cap, and a thematic will give you a little boost towards a particular manufacturing sector. If you are feeling that that is a little slightly more risky, then you can go for a multi-cap fund also. So you can go for either Nippon India or Mahindra multi-cap fund, which will give you one third exposure towards 25% in a large cap, 25% in a mid cap, 25% in a small cap,
So
and
that is the lump sum investment. All right. Okay.
some investment. Yes,
Okay. Sure.
that would
So
be the
okay, so on the screen we are flashing the SIP amounts. This is actually a lump sum investment of 6 lakhs that we are talking about. Let's move on and let's take Jitendra's question, Nisreen, and he says that he wants to invest for 15 years and what would be the returns he should be expecting?
He's given his fund name, so I'll just
Yeah.
go ahead, do an analysis of where he's
Sure.
invested. ICICI Pru Blue Chip, he's investing 1,000 rupees. Station is to increase that to 2,000 rupees, and this is for the, for good core allocation because obviously the large cap names are there.
Yeah.
This
ABSL Life Equity, exactly. ICICI Pro Multicap is also there in his portfolio. That's this makes it 5,000 rupees SIP. Next plate, please, so that we can see the funds as well. And then Motilal Oswal Midcap 30 again 1,000 rupees and SBI Multicap again 1,000.
Sure. So in ABSL, the 2,000 rupees, he can switch that to either HDFC large and mid or Kotak equity opportunities instead. Equity advantage has not really been performing that well. ICICI Prudential multi-cap growth, he's got 2,000 plus he's got SBI multi-cap growth 1,000. So he's advised to just do one of the two for 3,000 rupees. He need not have both. And Motilal Oswal mid-cap 30 fund regular plan 1,000, he can continue that. So that will give him 2,000, 2,000, 2,000 and 1,000 in Motilal. That's what he should continue. As far as his lump sums go, HDFC Dynamic Asset Balanced Advantage 1,50,000 he should continue. Tata Large and Mid also 1,25,000 he should continue, and Kotak Small Cap 1,50,000 he should continue because they're quite well diversified. He's got different sectors. So totally after 15 years, if you get a compounded annualized growth rate of about 12%, he can expect a corpus of 60 lakh rupees with the SIPs of 7,000 rupees and his current lump sum of 4,25,000 rupees.
Okay. All right, so that's the solution for Jitendra. But then let's take a quick break, and post that let's continue this viewer query session. And for all our viewers who are watching the show live even now, you can send across your queries on our WhatsApp number and email ID. Remember that you need to give us all the details of your current investment, and if there is any specific financial goal requirement for which you want a strategy, please do give us the time frame and the investment amount that you might want to put in every month or every year.